What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today we are looking at the exciting action that's been happening in gold and silver recently, and we're going to look at some of the drivers why gold and silver have been on the move and have been shooting up recently. We've now surpassed some key technical levels, and there are some fundamental drivers as well. So we're going to take a look at what's going on with gold and silver behind the scenes. Ready? Let's dive in. All right, so we know that with anything, when it really comes down to it, buying and selling is what determines the price, the supply and the demand. The price of anything at any given time is just the aggregate. It's the consensus on what that price should be between all buyers and all sellers. If the price is to move higher, you would need more buyers to come in and buy up all of the supply that the current sellers are selling. And you would eventually then push the price up to a point at which the people who currently own would be incentivized now, financially incentivized, to put new supply on the market and to sell. And that might put a lid on the price movement or even start pushing the price movement back down. It's just a game between supply and demand, buyers and sellers, and the current price is the equilibrium point. It's the current consensus on what something is worth. All potential sellers are waiting for the price to go up. All potential buyers are waiting for the price to go down. And anybody who is currently willing to transact has met in the middle at a price at which they feel is profitable to them. And we know that with gold and silver that the bullion banks are some of the largest buyers and or sellers of gold and silver. And we also know that with the bullion banks, a lot of their buying and selling is done through paper, and a lot of their selling is naked shorts. Now, a brief recap on what a naked short is. If you buy something first and then sell it, you're just closing out of a long position. If you own something, it's called being long. So if you sell something that you're long, you're not short, you're just flat. Short, on the other hand, means that you borrowed something and then you sold it, received cash or received money for it, and then in order to close out that trade, you will now have to go back and buy what you sold and then deliver it back. This is why when you buy a house with a mortgage, technically speaking, you are short the dollar. This is why short squeezes can happen on things like stocks, because when everybody who is currently short needs to close out their position, what they have to do then is go into the market and buy shares. And so everybody, if there's too many people who are short a stock, let's say AMC or GameStop, in order to close out their positions if the price is rising, what they have to do is they have to go buy shares to deliver them back to whoever they borrowed them from. Now, recently, over the past couple of years, the short position for gold, specifically with the bullion banks, has exceeded historical norms by a lot. On net, the bullion banks are usually net short under $20 billion worth of gold. Recently, that spike in shorts is presumably in an attempt to push the price down, because if you want to push the price of something down, you want more sell orders coming in to soak up all the buy orders to push down the market price. And so if you don't own any of it to sell, what you have to do is you have to sell it short. But that puts you into a little bit of a bind, because at some point then, now you're going to have to turn into a buyer if you want to close out your position. And that's exactly what the bullion banks have been doing recently. They've had to turn into buyers now of gold contracts. And the picture is very similar with silver as well. And in fact, with silver, we're seeing the vaults get drained. This week alone, over 40 million ounces of silver have left the COMEX vaults. Now, with silver, most of the shorts are coming from producers and merchants. But the bullion banks are still short about 60 million ounces of silver right now. And the larger the short position that somebody has on something, the better it is if you are a buyer and you want to see the price go up, because anybody who is short is eventually at some point gonna have to close out their position and at least go flat. And so the fact that, number one, the shorts for gold and silver are still historically way above normal, and number two, the fact that they've recently reversed course, and instead of adding to their short position, the bullion banks have been actively trying to decrease their short positions, and the fact that that has led to a recent rise in the price of gold and silver. These are fundamentally bullish movements taking place right now. Not to mention the fact that we are having an undercover yield curve control, if that's what you want to call it, happening right now kind of under the table. Because with inflation expectations shooting up and actual inflation numbers showing up in various sectors of the economy, a free market would push interest rates up. But interest rates have recently been going back down again, which means somebody is buying bonds to push these interest rates back down. Now, I'm not going to point any fingers here, but I would guess that if you're buying bonds at this price, you probably are somebody that has the ability to print money and doesn't care about profitability. And we have to remember that nominal interest rates are not the whole story. You have to adjust nominal interest rates with the inflation numbers to get what the real interest rate is. And as real interest rates go down, that is bullish for gold. Because if you're losing money by holding on to dollars or bonds, gold is a better option because now at least you're not losing money. If interest rates are going up, that's a different story. That's a headwind for gold. That pushes gold down like it has over the last couple of months, because if you're getting paid more than inflation to hold on to dollars or bonds, might as well do that. Gold you'd be losing, relatively speaking. And so with inflation on the rise, interest rates on the decline, bullion banks closing out their shorts, and the fact that we've exceeded and surpassed some technically significant price levels in gold and silver means that we're likely to see gold and silver investors rewarded for their patience very soon here. And obviously I can't make a video about gold and silver without mentioning miners, which are still severely undervalued, especially considering how profitable. They're just cash machines right now. They're still incredibly undervalued, probably the best buy of the decade. And so both fundamentally and technically speaking, miners here look absolutely amazing. And of course, you know the drill. I'm just a guy on YouTube, so this isn't investment advice. I'm not recommending anyone go out and buy gold, silver, or miners. But if you are wanting to put some of your money into gold or silver to help hedge against inflation, but you don't want to get taxed on those gains, a great way to do that is through iTrustCapital. They are a self-directed IRA, extremely easy to set up, and if you use my link in the description below, you get your first month free. I appreciate you more than you know. Thanks as always for watching, and have a good day.